And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show on AM 1170 The Answer. I am your host, Michael Gaddis of michaelgaddis.com and frontierloangroup.com. And I am here today with my special guest, Greg Himfar. He is a certified financial planner, a CFP from gfhfinancial.com. So Greg, I'm going to ask you a question here that, I talk about reverse mortgages on my show quite a bit. At Frontier Loan Group, I'm the CEO and broker of Frontier Loan Group, and I do assist and help a lot of seniors with reverse mortgages. Now, I have noticed recently that a lot of seniors are relying on financial planners to even give them advice on whether or not a reverse mortgage may or may not be right for them. What is your opinion on reverse mortgages?
I have to go back to my prior history and work experience in product development for a major insurance company, a Wall Street firm. And I can tell you with certainty, these products are developed to meet a need. Products today, for example, annuities with living benefits, are all designed to meet a particular need. And it's no different with a reverse mortgage. When the need arises and the product which is designed for somebody to meet a specific need fits, it's a good product. So I'm very favorable toward reverse mortgages when they meet specific requirements.
That happens a lot with me, and I agree with you 100%. As I've said multiple times on this show, reverse mortgages are not the right solution for everyone, but for those that they are, they can literally be life-changing. And I love engaging people in discussions, even people who have different opinions with me on different topics. And, I have spoken to other financial planners. I have spoken to, different people about, their opinions on reverse mortgages. A lot of times I've found that, people who have kind of a bad taste in their mouth about reverse mortgages don't really understand what they are or how they work. And for me, it's, I know a lot about them, so it's my second nature. But, getting an opinion from somebody who really understands from a financial impact what a reverse mortgage can do for someone's life, to me is really important. That's why I value you as a CFP. I value your opinion on this because, it is something that is really important. Now, let me ask you, what kind of a client do you think would be a good client for a reverse mortgage?
So the reverse mortgage definitely comes up in my practice all the time. It's the same. I get the same question: should I rent? Should I own? A good client for a reverse mortgage is somebody that needs additional income to sustain their particular level of care, for example, or their particular social lifestyle. I find that there are really two avenues or two reflections people often come to. They either want to pass on assets entirely, as much as they can, to their beneficiaries and live off their principal. And those that have said, I've raised my kids, I've raised a family, I want to spend down my assets and live the most comfortable and enjoyable life I can do. And really a reverse mortgage can be earmarked towards either. The particular person that it fits most likely, it benefits the most, would be somebody who wants to stay in their home, needs income to replace or meet expenses, bills, property taxes, insurance costs. That type of individual, it's very difficult in today's low interest rate environment to come up with a substantial sum of money to support someone's lifestyle. For example, at 2-3%, $1 million is only generating $20,000 to $30,000 a year in income. So is that enough to sustain multiple trips, mortgage payments, perhaps long-term care expenses, home care? Probably not. So financial advisors, planners like myself need to come up with unique ways to meet income needs. And the reverse mortgage is definitely, you're tapping often the client's largest asset, where perhaps that asset can generate enough money for someone to live very comfortably in retirement.
Well, you're listening to the Michael Gaddis Show on AM 1170 The Answer. I am your host, Michael Gaddis of michaelgaddis.com and frontierloangroup.com. And my special guest today is Certified Financial Planner Greg Hemfar of gfhfinancial.com. And you just hit on something, Greg, that I think is really important. I meet a lot of times with clients who basically paid a lot of money to help their kids go through college, right? Early on, instead of doing financial planning, they use that money to give their kids either a college or even sometimes a graduate education. But in doing so, they've sacrificed a lot of the money that they could have put into their financial plans. And now they're at a point where they're basically living or surviving but not living. They basically have enough disposable income at the end of the month to pay for gas, to pay for some basic necessities of life, but they don't have the ability to do anything above and beyond that. They're almost a prisoner in their own house, and yet they're sitting on a house that has a substantial amount of equity. I had a person in Oceanside not too long ago. They had, their house, I think, was, they had 75% equity in their house. It was 25% LTV. And they had $3,000 a month to pay for their house payment, to pay for their car payment, to pay for their insurance payments, to pay for their food, everything. At the end of every month, after they paid all their bills, they basically were underwater by a couple $100s a month, and they were borrowing money from their kids. By giving him a reverse mortgage, it allowed him to eliminate his mortgage payment, which was $1,100 a month. So immediately they recognized an $1,100 a month swing in their net disposable income at the end of the month. Then it also opened up the possibility of giving them a line of credit of $150,000, which grew by, I think it was almost 5% per month, because a line of credits grow in reverse mortgages. So, in this guy, this particular individual's case, his life literally swung from one end of the pendulum to the other. Now he has money. If he wants to go out to dinner, he can do it without feeling guilty. He could go to the movies. He could go visit his grandchildren. He could do a lot of things that he couldn't do before. So in that instance, he's a very good candidate in my mind for a reverse mortgage, wouldn't you say?
Absolutely. I mean, that. You have to look at the attributes and the variables that are involved in each person's situation. And if those attributes are positive, for example, a lot of people want to stay in their home. They don't want to leave their home. One way to you can tap the equity in your home through a reverse mortgage. You can make your home more adaptable. You can put in railings. You can put in an elevator. I've seen homes with elevators. You can pay for custodial care, somebody to come in if you don't have long-term care insurance. Where is this money going to come from? Presumably it could come from your largest asset and the equity that you have invested over the years into it. It's not for somebody to modify a 4-story townhome. That would be very difficult. But for somebody that wants to stay in their home, doesn't want to, for example, even you could take a look at the community that one lives in and say, how accessible is public transportation? That's also a factor. The home's physical needs.
Well, I think you've hit on a lot of things, and that's one of the biggest things that I see are people who come to me and say, hey, look, this is my forever house. I want to die in this house, but I also want to make sure that I'm not forced into assisted living. So I want to keep an open line of credit that grows so that I can tap into it to help pay for assisted living in the event I need it. That's one of the biggest things that I hear personally. It's not people who go, hey, I want to go on cruises around the world or go down to Paula Casino and drop it all. And that's not what I hear. What I hear are people who just generally want to stay in their house, and they don't have they have the financial resources through their house, but not through any other means to do so. So those tend to be the ones that are good candidates as well. Well, I want to thank my guest today, Greg Hemfar of gfhfinancial.com. As I mentioned, Greg Hemfar is a certified financial planner. And as we talked about in the previous segments, financial planning is not just for people who have a lot of money, it's for everyone. Everyone deserves to have the advice of someone like Greg Himfar. So thank you so much for coming on the show today, Greg.
It's my pleasure, Mike.
Okay, and we'll see you again next week, next Wednesday at 8 p.m. I'll be back to talk about anything and everything related to real estate. You've been listening to The Michael Gaddis Show on AM 1170, The Answer.